Legends, welcome. It's the Daily Buyer Show where we go through all things crypto related, macro markets as they relate to crypto, and then we deep dive Bitcoin. 22nd of November. So let's get into it. Bitcoin may rally soon, but there's context that we need to understand, and the main thing we need to be thinking about is this going to be a rally for a new parabola to new all-time highs, or is this just a counter trend rally in a bear market, right? And the thing is, we're going to see lots of conflict on X and out in the markets with opposing views as you get. But what we're going to do is we're going to break down the data, break down the charts, break down structure, and I'll give you my take, my bias, clear view on what I'm seeing. But what I typically like to do is I'm a reactor. I'm not a speculator. I prefer to see what the charts are telling us, take the signals in, and have scenarios planned. And that's how I've found my success playing with these crypto markets, is being able to change my bias and being able to adapt with what the market shows us and tells us. So just, I guess, straight from the top, I think what we're going to have I think if Bitcoin rallies, what we're going to have is a counter trend rally. Okay, that's because market structures are down. I don't see a sustained liquidity bid externally. I'm not seeing the same market context as we've seen historically to drive these massive parabolas. But however, if I do start seeing the things that I want to see, which I'll talk to you about in this stream, then I'll simply change my bias and we'll start trading the other way, and we'll start planning to be bullish again. But I want to show you in this stream exactly what I need to see and what I'm preparing for, essentially. So if we just quickly start where we usually do, net liquidity. So we are seeing a slight uptick in net liquidity, right? And this is our key gauge on if there's a liquidity bid actually coming in. So if I zoom in here, we're seeing this slight uptick in liquidity. Now, if you want to be bullish, this is what you want. You want liquidity heading this way, okay? This is our proxy on the Fed's balance sheet. What the TGA is doing is in the government, if they're spending, and the risk appetite based on whether banks are parking their money at the Fed, or they're actually deploying it into markets, etc. Okay, so we're seeing this uptick. I guess the question we're going to have to continue monitoring to answer is it just another one of these little upticks before it heads down further? Now, if we just stick to that, why are we seeing this uptick? Well, if we head over here and we look at two key things driving net liquidity, this is the TGA count. And as you can see, they've been refilling. This is essentially the TGA wallet, the government's wallet is how I look at it. And they've been refilling their wallet, which means draining liquidity because the government's not spending. Now, we can see here when we've gotten to around about this $1 trillion level, that's where the government started spending in the past. And lo and behold, we're around that $1 trillion level now. Roundabout, and we're starting to see some stalling in the government refilling. So are they preparing potentially to start spending again and start juicing the economy, considering we do have maybe they want to start juicing the economy into next year for midterms and all that sort of stuff. Again, those are the speculations that you'll hear outside of this stream. What we do on the stream is track the data. So essentially what we want to see is I've marked out this level here. Okay, if we're seeing the TGA spending come back below this level and we're going back down here, well, that would be good for markets, and that's what would send net liquidity higher. That's what we should be seeing in net liquidity, it moving higher based on the government spending. Now, the other thing is reverse repo markets. Essentially, when this goes up, it means that there's less risk appetite, okay? Because it means that banks are parking money with the Fed rather than deploying it into risk markets, deploying it into markets. So we can see that it's been grinding down here, but if we just stretch this out, we can see, I believe this one's daily, it's down again. Okay, so there's still that risk appetite there. When we start heading up like this, these spikes, you can see risk appetite is leaving the market, is moving away from markets, I should say. Now, the other key factor, this is stemming the flow of liquidity currently, slowing the supply and flow of liquidity, is the Fed's balance sheet. Okay, so this slight uptick we've seen so far, predominantly driven by TGA not refilling, potentially, so they're not pulling liquidity out of the markets, and risk appetite still somewhat there. But we really want to see what happens in the balance sheet, okay? Because if the Fed's balance sheet starts doing this, then that's going to give us the liquidity bid that we'll see in net liquidity to drive net liquidity up this. And that's when we should be considering changing our bias, because that's telling us that liquidity is actually coming back into markets, right? That, along with then monitoring Bitcoin's price action and structure, will allow us to confirm the external liquidity bid and that Bitcoin is essentially playing and moving in the direction of a potential parabola. But right now, it's still too early, right? Because we've seen this has been the trajectory of liquidity, and Bitcoin's price action has told us, by turning bearish on the higher timeframes and those macro timeframes, along with all of the other price action signals that signal transition to a bear market, that in confluence with draining liquidity is bear market confluence. So again, we'll flip our bias only when we start to see that net liquidity is turning up, but most importantly, Bitcoin price action will confirm it as well. We'll see bullish price action developing, and that's what we're going to jump into when we get to Bitcoin. We'll talk about specifically the price action that I'm looking for in order to shift bias. We won't spend too much time outside of crypto today, because I know in the last couple of streams we covered so much of this liquidity and macro stuff. We'll just do a quick skim through. So we did get markets closed. So where did we end up closing? Let's start here with, let's actually start on the 2-year, because we can see that the 2-year bond yield plunged lower, which is good, because the 2-year bond yield is the market speculation on rates, essentially, what the Fed's going to do. And as you can see here, overnight, we've had the Fed rate probability for December jump up to 70%. Previously from it was down, it had taken a massive turn, okay? We were down here in the 30s and 40s. It's jumped up to 70%, hence we see it in the bond, in the 2-year bond as well. So essentially we want to see this keep going down for a bull market, right? Because this is the market expectations of rate trajectory. And when the market expects lower rates, i.e. cheap capital, that's when they'll deploy into risk, okay? So we do have a few signals triggering potential liquidity bid coming in, but to me, it's still kind of aligns with a short-term liquidity. I don't see the steady liquidity bid just yet. The DXY, okay, and as expected, considering the rate expectation jumped higher for a cut overnight, and the yield is coming down, the DXY is paused. It's not just pressing higher, because you got to remember the dollar will gain strength with higher rates. We're still monitoring this cycle ending pattern. Okay, I won't go through it. We go through it pretty much every stream so far. But as long as the DXY is not charging up, we can build more of a bull case. Okay, so the thing with the DXY right now is it's got quite a bit of work to do to confirm bearish. Like we need to see it at a minimum below this last daily structure high. Okay, but a sweep of the high is a good start because it's showing us some type of weakness coming in here. And a move like this, right, that would support a risk bid. So that's what we want to see. So the DXY's on watch. We'll jump straight into the indices because we're still coming off the back of NVIDIA earnings. Now the VIX is starting to head down, which implies it's a volatility index, right? So the VIX heading down typically aligns with bullish price action in the indices, right? So if the VIX is heading down, this is where we're seeing bullish price action. Typically when the VIX spikes, there's some type of major volatility. It could be some type of sell-off. It could be a lot of these different things. But if its trajectory is back down, that would support the indices heading back up. And why do we care about the indices? Well, we care about the trajectory of the indices because Bitcoin follows the trajectory of some of these key indices, especially the SPX and the NDX. Now, DJI, this is where I did take a look at all of these indices before the stream, and it's good that we've got this bid, right? Let's see how the weekly actually closed, but the weekly close is still a bearish weekly close. However, weekly structure is still intact, but we've got to be monitoring this key signal we discussed in yesterday's stream where we're testing the daily structure. We've had closes below, and despite this push back up, is this a rejection from the daily structure? And the bands are becoming red. So what we're monitoring essentially is this and this, because this would mean we're transitioning to a bearish structure, okay? And we're already seeing signs of potential warning to keep a close eye on this. The SPX is, it looks a little bit better in my opinion because we haven't got those deeper closes beyond the structure level, but the bands still are a warning and still on watch, right? Now, ideally, this is a sweep of this low and this continues higher. And I say ideally because the NDX, for the NDX cycle ending pattern that we see, the NDX has to keep moving higher because once it rolls over and once the NDX actually moves into a bearish trend, then Bitcoin's got no hope, right, of anything other than just internal counter trend rallies. Okay, so if the NDX is rolling over sooner than this signal, If it's rolling over now, for example, like this, then that would be even more bearish for Bitcoin in its current state. The bulls have no hope then of any type of new parabola, right? Or any price discovery. So the main thing I want to point out here as well is don't get trapped thinking that because the NDX is moving higher, Bitcoin also needs to be in all-time high territory, because historically that hasn't happened. Because look, if we just go back to the 2021 cycle, right? Bitcoin topped and started distributing within its range 280 days, around 280 days before the NDX. That's the main point here. Bitcoin tops historically before the NDX. So if you're looking at the NDX and going, hold on, why does the NAS just keep charging higher? Why is Bitcoin not catching up? Well, we've seen that this happens historically. Even here in the 2017 peak, Bitcoin peaked 280 days before, and the NAS kept charging up while Bitcoin was fully transitioning into its bear market. Okay, so that's where I'm not simply saying to myself that because the NDX remains bullish and is making all-time highs, Bitcoin has to do the same, because history shows that that is not the case in these ending phases. So I still want the NDX to continue doing its thing and moving higher, because it just gives me an easier read on the markets because it's following historical trajectory. But we've just got to be aware of that, okay? Just because the NDX keeps having strength and moving higher doesn't mean that Bitcoin should do the same. Now, the last thing we'll look at is NVIDIA, because NVIDIA's our key signal on the trajectory of the SPX and the NDX. So the main thing we want to monitor here is NVIDIA is still bullish. So far, just a sweep of its daily structure low. Now, if I throw SPX up on the screen, I pointed this out in yesterday's stream that when we are moving into somewhat of a market top, whether it's a major top, a minor top, a correction, whatever it is, NVIDIA can often be the leading signal that starts showing some type of divergence, the bearish divergence. I went through it, and it often tops earlier. Okay, so that's why we're just keeping a pulse on NVIDIA at the moment, because if NVIDIA starts, the main thing we're watching right now with NVIDIA is if it gives a bearish divergence against the S&P, then we need to consider that it may be leading the S&P just as it has done historically. Okay, so if the S&P starts going like this, okay, it starts just trending up and makes a new high while the NAS just makes the NVIDIA makes a lower high like that, then that would be a big cautionary sign for us to consider some potential relative weakness. So we'll keep an eye on that. But even if we just quickly zoom out on the really high time frames for NVIDIA, right? So right now on the quarterly, we've swept Q3 highs. Still time. There's still a whole month for NVIDIA to keep pushing higher and reclaim. The Q3 lows are still well intact. Now, even if we got some type of correction down to the Q3 lows, right? Unless it starts trading below the lows, and even when it does, I mean, this thing's been parabolic for such a long time. I mean, here was the last bear market, right? And you can see when you got that first close below the lows, not a sweep of the quarterly lows, then it typically meant that you got some more weakness in store for the next few months, right? So here, we had an inside bar, we had the sweep of the highs, and we did get that close, but then that close signal of further weakness was invalidated because the next quarterly swept it, right? And that told us that we could invalidate the idea that we're going to be further bearish. So hence, that's why we should be just monitoring this Q3 lows. And what's that? Be a 28 to 30% correction from the highs, even if it went down to it. Doesn't seem that out of the ordinary. Yeah, see, look, previous corrections, major corrections, down 60, 70%, right? So again, just monitoring structure. What do we got? Monthly lows. We've just tagged the monthly lows. So this could be setting up for further expansion in December. If, see how the highs aren't taken, right? We haven't taken previous month's highs. And if this month, November, closes as a sweep of October lows, then we could be looking for a signal on, or a trigger on December being bullish, potentially coming back up for these highs. Okay. Cool. That's it from the macro markets. Just wanted to point that stuff out because, again, we always use the macro markets and the macro liquidity picture to guide our trajectory on Bitcoin, but ultimately price action is what we use as our key signal and trigger. Price action will confirm, right? And quite often price action will lead. So straight into Bitcoin, actually, no, not straight into Bitcoin. First thing I want to share with you guys is this very important stablecoin dominance chart. Now, this is the chart you need to have up all the time. Okay, you need to be monitoring stable dominance. And I look at USDT plus USDC because they're the two biggest. And we need to be monitoring behavior because there are just very clear patterns. But even if you just think about the way participants play in the crypto space, they move to stables when they're going risk off or taking profits, and they move from stables into tokens when they're going into the market. Okay, so this is such a very important internal crypto liquidity signal. And you can see here, we've got this multi-year support trend line. And when we come into it, there's typically some type of correction, a retracement or a bounce, which aligns with whenever stablecoins go up, Bitcoin and crypto will go down, right? So this was the 2021 top, and you can see when it broke out from this kind of major range here and just kept its trajectory up while the weekly bands were green, that was transitioning to a bear market. Now, I flagged this, I've been flagging this over the last few sessions and the last few days, and if you're on my X, I've been posting it there. We're in this danger territory where this is full-blown bear market if we're heading up here, okay? Now, I see a lot of people on X calling bottoms, saying that's it for the bear market, or not even the bear market. They're not even calling it a bear market. They're just calling it a pullback, a correction. You know, a lot of people are saying that, hey, this is a standard correction in Bitcoin's history, without taking into consideration the fact that the participants in the market every cycle change. So the participants in this cycle, I call it like the early institution. No, sorry, not the early institutional. Last cycle was the early institutional, early retail cycle. That was the emergence of Michael Saylor, CME futures started. So it was early institutions, right? This cycle is the institutional onboarding cycle, where we're onboarding all of these institutions now, whether it's, through ETFs, companies, the DATs, the treasury companies. We've got nation states, countries saying they're looking to add it to their reserve, the US, all that sort of stuff. So we're in this onboarding phase. So if you just think about that in terms of the psychology of participants, they haven't been through the prior cycles. Yes, they may have studied them, but this cycle, we've only conditioned them to 20 to 30% pullbacks. So we don't know what their behavior is going to be like when we get pullbacks bigger than 20 to 30%. Okay, so that's just one thing that I consider, is that it's very easy to just say, hey, these pullbacks are normal. These, if in Bitcoin's history, it dumps 50, 60, 70% and it can still be a bull market. That's, yeah, cool. That may be true, but I just try to think of the psychology of the current participants in the market. Okay. Because if we just look at this stable dominance chart, this to me tells me that if this is breaking out, we're nowhere near a bottom. we got so much lower to go, because if this is just breaking out, just like here, if I put Bitcoin's price on the chart, here, when we were just breaking out last cycle, Bitcoin was still at 40,000. And where did it go down to? It went down to 15,000. Okay, so if you just think about that now, right, and you think about people saying that we're close to the bottom now, can't be much lower, and this is only just breaking out, I think they're going to be in for a big surprise, okay? And hence, this is why I try to look at the data and stay away from speculations, because yes, we may have gone down 20 or 30% and it could feel tough, but the data shows that what's going to happen. Like, it just shows you that there's plenty more room to go, right? Now, on the flip side of stablecoin dominance, being that we are up here and we have had this massive push up, we can actually come right back down and still be above the trend line, and without breaking any market structure, and even just find support into the bands before having another bounce, right? And still being bearish. But what does that mean? That means during this segment of when stablecoin dominance comes back down, you'll have massive counter trend rallies. So it supports counter trend rallies, but not until this actually rolls back over will we know if it's actually a sustained bid. This is just internal crypto liquidity, right? It's just stablecoin liquidity flowing back into the market. So hence, keep this on your watch list. And if this keeps trending higher, stop listening to the people who are calling bottoms, because this if it keeps going higher, we can go much lower. Okay. So coming back to Bitcoin now, we've laid the context, right? So far, what context have we laid? We've laid the context for the macro liquidity picture. We know what we're looking for. We're looking for a sustained external liquidity bid, and all we really need to be looking at is net liquidity, okay? And we're seeing a slight uptick in net liquidity, but it's still nothing meaningful. We're also, what else are we monitoring? We're also still seeing a lot of those cycle ending patterns, okay? The NDX and the DEXY, okay? So they're still on watch. Meanwhile, Bitcoin is in a confirmed bearish structure, and it's provided a lot of historical price action signals that we're in a bear market already. So that's the context that we're working with. So with that context, it's very likely and possible for Bitcoin to have a counter trend rally like this, okay? And during this counter trend rally, altcoins will likely rally as well. Some will pump crazy numbers, because in bear markets, you got to remember, even in bear markets, you can still make 100, 200, 300, 400% in certain altcoins. You just got to understand the context and how to play them correctly, because they are very rotational. You can't be bagging this stuff for the long term. Even in a bull market, you've probably worked out that you can't do that. Okay, tokens have seasons. You got to keep them separate from alt season as well. Like, you can't just buy this stuff and hold it for the cycle for the most part. Sure, there are a few that you can hold for longer, but for the most part, you got to understand that once a token has its season, that might be its only season for the cycle. Okay, so during this counter trend rally, alts will likely rally, but given the current Bitcoin context, we've got to expect that it's probably a macro lower high, unless we get that external liquidity bid. okay? Unless net liquidity turns up and keeps moving up. And what would turn that up? I've mentioned it many times before. It's the Fed shifting to an aggressive easing stance. So they cut rates aggressively and they actually start QE. Okay. And again, we'll see all that coming through in net liquidity. So that just lays the context for the fact that what you're going to see is, and I put a post out yesterday on X that you're going to get, when this counter trend rally happens, you're going to get a lot of the bulls who are still saying it's a bull market and who are somewhat starting to get on the fence a little bit, where they're saying, oh, they were uber bullish 10% ago. Now they're getting a little bit less bullish, but still saying all the, kind of things that we're in a bull market. Now, when we get that counter trend rally, X is probably going to fire up and all of those bulls are going to be running victory laps as if they've won. Okay. And we've got to be monitoring when and where they're running those victory laps, because especially if it's slamming into like key higher time frame resistances, usually the sentiment goes crazy and uber bullish, too fast at a time where we're coming into key retrace levels, and that's often a good signal to look for your specific triggers and signals to go against the herd. Okay. Now, they'll be running those victory laps into what essentially be a lower high, okay? Likely a lower high, unless we get that external liquidity bid. Now, the last thing is I want to show you before we actually deep dive the price structure for Bitcoin. So a lot of people are saying, I've noticed on X, a lot of people saying, oh, this price action's so crazy. I've never seen it go straight down and go down 30 to 35%. I'll flick it on the daily chart, right? This is where you'll see it a lot more. We've not seen Bitcoin go down so much, barely giving any retracements, because in this leg, it barely gave any retracements. When sometimes I just wonder if they just go look at the last cycle, right? Because what do you think this is? When the cycle ended, Bitcoin went down pretty much in a straight line from 70, just under 70K, 50%. Like, where are the pullbacks there? If even if you were trying to wait for the right short signal, like maybe you got something in this pullback and you shorted it, but this was pretty much straight down. Like, what structure is there? How is that so much different to this, right? We've come down. We did give these stalling at the levels we should have stalled at, and then once we crashed through them, we've just pushed down. This is, unfortunately for the bulls, this is just normal bear market behavior, right? You didn't really get many pullbacks here. We stalled. Maybe that was your first interim correction. Then you had, this was the major rally, right? This was the major counter trend rally that probably trapped heaps of people and fooled everyone. And the funny thing about this is, look at the timing of this, right? This was actually pretty spectacular when I was looking at it yesterday. This was the biggest counter trend rally time-wise, okay, during the last bear market, 71 days or so. If you go to point of start till breakdown, you got 100 days. This was the longest counter trend rally that in the confirmed bear market, 104 days. Right, and look at the timing of it. It was around about mid-Jan to March. Now, if you've been keeping up with my channel and my X, that mirrors the ending of the historical NDX pattern right here. Look at that timing, 6th of April, end of March. So I don't know, sometimes you look at these things and you think it's magic and it's just crazy how the timing aligns, but then you realize it's all kind of cyclical, right? Because around this time for us, the fact that it aligns is we're going into Q1 and it's starting the midterm election year. So, you know, a lot of this stuff is quite cyclical. But I just thought that was interesting. We're about to, that's where in January, the January post the peak, which was in November, okay, the January was where we had the massive counter trend rally from January to April. And prior to that rally, it felt like the market was just going down and down and down. And then we had the massive counter trend rally for 100 days pretty much. So just call it 3 months. Now, if you look at where we are now, the peak was October, and it feels like we did have one bounce and then one half semi-decent bounce, but it feels like we've been down and down and down. And do we follow that pattern again? Does the liquidity potentially come in throughout December? And by the time it filters through into the market, during December, we start seeing these actual bottoming signals. And then the liquidity bid comes in. We get that massive counter trend rally till March, and then that's it. Again, let's not speculate, but let's just have those considerations if we see the right triggers and signals. It's just kind of interesting that the timing is very similar to the last cycle, and a lot of things are marrying up to last cycle. So I wanted to point those things out because this is, so far to me, there's nothing different here than what we've done right into last cycle, bear market, when we were transitioning. So first and foremost, let's go through key levels in Bitcoin, and let's go through what we need to do. What do the bulls need to do to start creating some strength, and where are the likely areas that we should see rejections and potentially turnover, and when can we actually be bullish? So first and foremost, I'm keeping these levels up here. These are all the key levels that we drew up in the last couple of sessions that are all still relevant. Okay, so on the quarterly, we're still monitoring. We're well and below the quarterly lows. If December closes back above those quarterly lows, that would be a big win for the bulls, I'd say, because then we are faced with an outside bar candle. It just creates better price action for bulls, more bulls or more demand to step in, let's say. Okay, but the monthly is still looking ugly. However, monthly structure is down here. Okay, so that's a key monthly structure level. So let's put that on our chart now, considering it's somewhat within range. And again, because the monthly structure is still technically bullish, but why do you not really, it depends on what time frame you're investing or trading on. From a trader's perspective, if you're waiting for the monthly to turn bearish, you've already waited to lose 40% before you've turned bearish. And if Bitcoin, it's a big if, because again, different market participants, but if Bitcoin corrects 80% or 70% or whatever it is, I mean, you've waited for almost all of it before you've potentially realized some profits and crystallized or anything like that. So anyway, we do have this monthly level down here. We should be marking that up on the chart now because it's becoming relevant. Now, if we go to the weekly structure is bearish, as we've been calling out. So what do we actually need to see, right? So a start would be daily structure. And I'm talking about on the swing, more of the swing timeframes. I don't really go on these streams. I don't really go below the daily too often because I'm not really here to talk intraday, day trading setups and stuff because it's so subjective. I could give you levels and we could both trade the same levels, and the difference between me being profitable and you losing is execution and management. So That's why, again, my focus is to stay back out on these swing macro timeframes to help guide you through these macro cycles. So hence, the first thing we need to see is our daily structure still remains bearish, and the primary structure high is right up here, right? Hence, this builds potential context for that counter trend rally, because it can come right up here if it just keeps rallying and still be bearish until this is flipped, okay? And then this becomes the new bullish trend. So if that flips and we start seeing those bigger signals of momentum dying, then that's a huge macro short signal. Or if you're still holding bags and you wanted to take profits, if you weren't just trading, if you weren't just long-term holding cycles for, 5-10 year time horizon kind of thing, then this would be your place, right? If we get it, it's a big if, right? If we get it to take some of those profits and roll it into the next cycle. But again, it's if we get it. So first and foremost, what's actually on the chart in front of us as of right now's price action, we need to be above this 107K level, 107.5K level, in order for daily structure to flip bullish. Now, what's the other way daily structure can flip bullish? It's if it creates a new lower high, okay, and then comes down and creates a new lower low. Because then what does that do? This, when it takes this lower low, this becomes the new low, and then this becomes this new primary level that needs to be flipped, okay? So hence, this is how I'd actually build my more bullish framework, where first and foremost, the daily flipping bullish, right? If it starts doing this without creating a lower low, right? This is internal price action. It's the price within the last low and high. So this to me doesn't weight the favor, doesn't weight my probabilities of being macro bullish until this is still respected, because it's all still internal price action. So quite often I call it a complex pullback. It's in my, I actually did an episode in my building block series where I talk about complex pullbacks. And that's where on the same time frame within the high and the low, you start to get a new structure developing, okay? And because it's contained within this high and this low, I call this is internal structure, but what I call it is it's a complex pullback. And at the very least, it's telling us something's different's happening. The market participants entering the market, the makeup of market participants is changing, because if this is a strong bullish structure, it wouldn't make a complex pullback if it just wanted to push lower. It often would just go like this and this and this, right? So it means that there's potentially a shift in momentum, but also it could be just the market reaccumulating before a bigger move down as well, okay? So really, if this type of price action builds, right, without this low being taken, moving the primary low lower, then I always still side with the primary structure, okay? And until that primary structure is converted, until this goes like this, okay, only this, when this happens, when this primary high is taken, then this becomes our new primary structure, okay? So if we see this, I'm still going to be leaning macro bearish. If we see this on the daily, okay, it comes up, creates a low, that low, right? And even better if this ends up just being an SFP or a weak low, whatever it is, then we come up here. This is going to be my new primary high, okay? And now, as we do stuff like this, price action like this, now this is starting to tell me that on the daily, we're starting to build bullish primary structure, right? Because the primary structure shifted here when we created the new low, shifted, right? So this is telling me, all right, we're having buyers step back in now because they've even shifted the daily market structure. The challenge we still face is we need to see a similar thing on the weekly structure, because the weekly is also bearish, right? So let me just clean this up. All right, and let me put our primary daily back here. Okay, so on the weekly, we need to, even if the daily turns bullish, okay? So let's say the daily's turned bullish and it started to do this. Now, the problem we face with the weekly is the most recent weekly high is up here. Now, you might be able to make a case for this being a weekly high, and that's okay too, right? I'm fine with that if you wanted to make that the weekly high. But it still means that even if daily turns bullish, you still need to get back up to at least here on the weekly and start closing the weekly above here before the structure actually shifts primary bullish. Now, how would I change my mind sooner on the weekly? Well, as if we just do the same thing that I just showed you on the daily. So if the weekly comes up, okay, creates the lower high here, turns over, brings our weekly low high down here. Then if we just get above this high, build structure above this high, then I'm bullish again, because that would mean that the weekly's bullish and the daily's bullish. Okay, that would make me shift my bias. Now, if we do all of that, we shift weekly structure, we shift daily structure, and we're getting an external liquidity bid, we're seeing it in net liquidity, that liquidity's increasing, then the bull market's back on. Like, that's when I'll go, we're back in bull market territory, load us up, and that's where I'll be more interested in bigger spot positioning to go long. But as it stands right now, structures are bearish and we don't have the sustained liquidity bid in the data just yet. So hence, and with all these signals on the bearish side, there's no reason for me to be bullish just yet, except for the fact that we could have a counter trend rally. Okay. I think that pretty much covers it for today's stream, legends. I hope you got something out of that. Where are we at? Oh, Rich, thanks for joining us, legend. What do we got? We got 3 viewers today. Okay, we're sitting around 3 to 4. I was going for 5. Big milestone. But Rich or anyone, any of my beloved 3 viewers, if you've got any questions, just drop it in the chat. Good to see you, Rich. Thanks heaps for stopping by. If you want me to check anything else, any other charts out, or if you got any questions, just drop it in there, and I'm happy to answer. Otherwise, we'll just wrap it up. Oh, Cotstar legend. Thanks for joining again. Awesome. All right, legends. Well, I hope you have an awesome weekend. I'll be back again tomorrow, same time. For now, I'm just doing these daily and having a bit of fun with them and seeing where they go. So if you're around tomorrow, see you again. If not, have a great weekend. Thanks, legends. Oh, nice. Well, thanks, Rich. Enjoy your bedtime. Have a good sleep. Almost 1 a.m. Crazy. Thanks for stopping by, legend. I'll catch you guys later.